Morning, Steve Free in Chicago with the results of the USDA November crop report. First of all, in the United States, USDA raised the corn crop to 13,654 million bushels. That's a 169.3 yield. They also raised the soybean crop to 3981 million bushels, and that's a record 48.3 yield. Right now, you've got beans down about 11 or 12 cents, corn 6 cents, and wheat 7 to 9 cents. They also raised the U.S. corn carryout to 1760 million bushels from 1561. They lowered exports 50, ethanol 75, and raised feed 25. They also estimated the bean carryout at 465 versus 425. They raised the crush 10 and raised exports 40. They estimated the U.S. wheat carryout at 911, basically because of a drop of 50 million bushels in exports. Globally, the USDA estimates wheat stocks at 227.3. That's down slightly from October due to a lower Australian and lower Russian crop estimate. They raised the corn world carryout to 211.9 from 187.3, and most of that is due to the increase in U.S. crop carryout. And they lowered the bean carryout to 82.9 versus 85.1. That's because of increase in China imports and also increase in Argentina and Brazil exports. The USDA also looked at world canola numbers, and the USDA estimated the canola crop up to 67 million tons from 66.2, and they raised ending stocks to 5.3 from 4.96. As you can see in the chart, the canola futures market since the beginning of September is pretty much going sideways. You've got lower demand is offset by the lower supply, but in recent updates, the Canada canola crop has been increasing. One thing I did want to point out to you is that ADM is offering a new seed called Nexera, and that seed is at a premium. That seed also produces a high oleic canola oil, and that oil is favorable into the United States, and we've seen imports increasing in the United States because it has no trans fats. It's better as far as frying, and it also has a longer shelf life. So if you're interested in the premium on this canola seed and the benefits it has with increasing demand to the United States, please give your local ADM Canada merchandiser a call. Again, prices lower after the USDA raised U.S. crops and raised the carryouts. And one thing I did want to note in that since 1998, since 2007, the average corn futures price on the September low has been $4.20. Prior to that, the average price was $2.05. For soybeans, since 2007, the average price is $12.50. Before that is $4.80. If we're seeing a slowdown in global trade because of maybe the lower economic growth, what is true value for corn and soybeans and wheat? As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.